I want to talk about, I have a lot of my clients reaching out to me and they're, that the market's been crazy and, the market's doing its thing, but what it really is Howard Capital. And I wanted to talk about Howard Capital today for a multitude of reasons. Number one, I introduced you to them a few years back and your clients have gotten to take advantage as well. And just talking a little bit about what it looks like, what it does, what a higher standard deviation does to you. But mostly, we invest for long-term gains or returns on our money so that we can retire or have income in retirement. And I mean, we talk about it all the time. The numbers don't lie. If I was just asking you to share what you want to say about Howard Capital, what would be the first thing that you'd say?
I would say that, very honestly, I'm blessed that you introduced me to the portfolio, and I know my clients are as well. As I tell people who I sit in front of and they say, well, geez, if this portfolio is so good, why are you only telling me about it now? And I tell them that, you could line up 100 different financial advisors and ask each one, what's your portfolio? What do you like? And out of the 100 advisors, you would probably get 90 different portfolios. So the world is certainly cluttered with investment choices. But again, I take my hat off to you. You are probably one of the most astute people in the industry when it comes to kind of digging out and getting bottom line details. And, when you introduced me to Howard Capital, it wasn't just, hey, look at the returns. I mean, you just had a lot of academic research to go behind what you were sharing with me. And you kind of pulled back the curtain and really introduced me to something that, honestly, for a long time, I resisted. I mean, I've been a kind of advisor that really believed in passive management, and tactical allocation was something I stayed away from. But you can't deny an over 20-year track record of a company that has produced amazing returns. So I would tell people that, if you're really just kind of chasing what I would respectfully say, which is an average return, maybe 6 or 7%, you probably don't need a financial advisor. You can probably do that on your own. But if you're really looking to, beat the market more times than not, I think you owe it to yourself to really take a hard look at Howard Capital and what they bring to the table.
Well, absolutely. And I like what you said, a long-term track record. I mean, they have a track record of over 21 years now of blowing the S&P away. I mean, I say that openly, but the numbers don't lie. And then what I really like about the fact that it's very unemotional. I mean, it's an algorithm that's been tweaked for 20 plus years, getting better and better all the time. And with technology today, if you're not being tactical, you're not taking advantage of AI, which I do think is going to play a part in trading as time goes on. If you're not doing something better that's a system to try to beat the market, then you're probably a dying breed, I would think. Because
I'm sorry.
But just like you said, I mean, if you want, I love Vanguard as a company, and we can be very, very diversified and long term and let it do its thing. But you are going to pay a low expense ratio and get very average returns. But if you're looking for something different, well.
And not only something different, but I think in today's day and age, investors need some kind of protection. You need some kind of guardrails around your portfolio to try to minimize some of these market drops. And I'm a big fan of Howard Capital's Pivotal program, which kind of, very simplistically creates stop losses in a portfolio and gives you the opportunity to kind of get out of the market, protect your previous gains, sit on the cash, and then invest back into sectors and still pick up those impressive returns, even when the market's down. So I think it's important for investors today more than ever to have a downside strategy other than just simply looking at an annuity or sitting on the sideline in cash. And I really applaud Howard Capital's, new Pivotal program.
Yeah, the pivot points are a great thing. And it just goes to show you, hey, this happened in the market. 2022 happened in the market where, the market's whipsawing back and forth. And how do you tweak something to make it better? And as you go on, you always want to, I think the Japanese call it Kaizen or something like that. It's constant improvement, right? And that's something that's very great. And yeah, exactly. The pivot points, we buy into the market and we have a stop loss on the top and the bottom. And behind that, which is not perfect, it's the buy line. And a very smart man always says, don't fight the trend. Right now, the trend is still clearly up, even though we have many people out there that know that there should probably be a correction, 5-10% correction to lock in some of these gains that we've had, and that's a sign of a healthy market when it pulls back and solidifies those gains. But until that happens, don't fight the trend. Don't fight the momentum. Take advantage of it and ride that roller coaster on the upside.
You know,
Go ahead.
yeah, and I was going to say, even though we all know that, past performance is no guarantee to the future, I think what does guarantee future, not necessarily returns, is a stylistic approach. And what Howard Capital brings to the table is not necessarily a predictable return, but they bring a predictable philosophy and strategy that just simply makes sense over the long term.